I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Nick Simpson. Nick is the founder and CEO of Mentis Capital Partners. Nick has a really interesting story, and we've now known each other, I think, 6 or 8 months. So we've gotten to know a lot about each other. Thanks for coming on the show today, Nick. I'm glad to have you on, and I look forward to hearing your story sort of for everyone listening. So why don't you give us a little bit about your background?
Yeah, thanks for having me. So I'm a real estate developer in Salisbury, Maryland, and I focus on multifamily student housing, and I've had a past life with a little bit of commercial and retail, and certainly focus on the value add and redevelopment type plays in the market, and have grown from one house to 2 to 10 to getting into larger multifamily properties, and started similar to a lot of other people, and have a lot of goals for continuing the growth, and look forward to kind of navigating some of these tougher times and being better because of it.
Yeah. Knowing what I know about you and your background, I think I would argue that maybe you don't have a I think we have a similar background in terms of sort of when we started working and things like that. Would you talk a little bit about your lawn care business and sort of how that all got started? And I think I'm really gotten big into mindset, and I feel like when people hear this, they're going to understand why this is, sort of compelling in terms of mindset.
Oh, sure. So I guess it's always been ingrained in me. I mean, my family never really had like a ton of excess money. I mean, we weren't, there was food on the table, of course, but there wasn't like, a ton of excess capital. And my parents kind of instilled in me at a young age that you can go work and, reap the benefits of your labor. And so I started a lawn care business at a really young age, and started with one lawn, and then 2. And I'm talking like I was maybe in 6th grade, 7th grade, doing one lawn, and then, got into the point where I was at senior year of high school, where I was cutting enough lawns to then sell the company, and then I paid for my college. And I really had that aha moment, when my parents told me, I think my parents told me in 7th grade, they're like, we're not paying for your college, but, we'll help you, get to and from the lawns and stuff, and we'll help you do it so that you can pay for it yourself. And I think that light bulb moment went on. I felt like I had the power to change my situation, and I really got to work. And I think that work ethic was really ingrained in me, and I took that with me to college. And I still remember when I got there, I was bored. I was used to getting up early, kind of getting, I was still doing school, so I still had to go to senior year of high school, but I was still getting everything ready for the day. And then I would leave school early and go cut lawns until dark, or run the mulching crews, or whatever we were doing. I mean, it was simple stuff, but we were making decent money. And when I got to school, I was kind of bored, because like my schedule was not nearly as rigorous as what I put myself through before. And eventually I found my way into reading Rich Dad, Poor Dad, like many other real estate investors had. And that was what started the real estate path for me. And that was coming right out of the recession. I think it was about 2000, maybe 12, when I read that book. I read it in one Saturday, didn't put it down, and ended up buying my first house pretty shortly thereafter, and did a ton of sweat equity. It was a total I mean, the total purchase price, including renovations, was maybe $70,000. And it came with a lot next door, and I had to go through subdivisions to subdivide the lot, but ended up selling that piece of land for more money than I had put down in the house originally. So I took all of that money and moved on to the next one and the next one, and it grew from there. So it just, I think a lot of people thought I was crazy for starting the recession, but in hindsight, that was the time to be buying real estate. And
nobody thinks that was crazy now.
Yeah, exactly. So, I just kind of, I didn't have all the answers, but I knew I was going to figure it out and just got started. And that's always been kind of how I've kind of made things happen.
Yeah, just doing it. And I think, we've talked about it, but similarly, we didn't have a lot of money when I was young. I happened to have an uncle that had started a business just pressure washing, and he's like, I need people to work for me. Okay, so I was also like 12 or 13, went to work, learned what work ethic is. And it is funny that when you come from that and starting it at a young age, and then you do go to college, you have a lot of extra time. Like you really do have a lot of extra time. Like
Yeah.
College is not that hard. It's kind of I think very, if you do the right things with it, which you did, you can make a lot out of it. Now, I will say you did a lot smarter things with the money than I did. You kind of started building your real estate portfolio right away, which is great. And also you say, oh, I did this, landscaping business and I sold it and I paid for college. And you say that like that's nothing. Like paying for college before you start college is a huge deal, right? Like there's a national crisis basically in terms of student loan debt. So aside from the tremendous accomplishment that it is, so congratulations, like the
Thank you for that.
The value that created for you going forward, to be able to have something that you did and you grew and built up before you even started college, kind of set you on the right path of not having a bunch of student loan debt when you came out. It's like, I mean, really, you did everything right. Like everything that I want young people to know. Like I want them to listen to your story and be like, just do what Nick did. It's not easy, but it's that simple.
No.
Just do what he did, because you will come out on top. Like you'll have, a very, very good foundation to kind of go from there.
And even if real estate's not your direction, which I hope that many people consider it, but just coming out of college without any debt really gave me the freedom to pursue whatever I wanted. And I just I really believe in like personal responsibility. And I know that might not be the most popular opinion these days, but that's kind of what this all centered on. Was I had the ability to change where I was going, and it was my work that changed it, and I could control that, and I can get up and go to work. And I got done with college in 3 years because I was paying for it. And I guarantee there's students that, maybe their parents are paying for it, or they just took loans, and it was just more comfortable to go through with 4 years. And I would have enjoyed that too. But at sometimes I think we just have to make the harder choices and just tackle those barriers. And I'm not saying, I'm a perfect path at all. I've made plenty of mistakes along the way, but I've just tried to give myself the best chance of succeeding, and try to keep going down that path. But the student debt thing is definitely something. If you have it, tackle it as fast as humanly possible, get it out of your life, and it will just open a lot of possibilities. I mean, the first couple of years I started the company, I was doing a lot of the renovations, and then eventually kind of started a construction company, and that was doing new construction and doing all of our tenant fit outs. And we were really, growing that arm of the company. And I wasn't taking any salary because I didn't need to make, any kind of debt obligations. There wasn't new cars to pay for. There wasn't fancy vacations or college payments. It was just keep the overhead as low as possible. I was even sleeping on friends couches, and I've slept on a couple job sites and early on, I mean, I wouldn't be afraid to do it again if I had to, but I guess what I'm getting at is personal responsibility does come, you can change yourself. It's hard to change everybody else.
Absolutely. I mean, yeah, I do talk a lot about mindset on this podcast, and it's become, I think it's funny because it's almost like real estate and mindset are really intertwined. And I think that a lot of people get into the real estate world, and if they realize that if they're going to be successful, they have to develop that mindset that is in alignment with what you're talking about right now, right? This like personal responsibility. Everything I do is a choice. I choose to get up early. I choose to put the work in. I choose to, forego the fancy car. But I think with you, congratulations to your parents or whatever it was, something instilled that in you at a lot earlier age than it does for most people. And I think, sure, maybe you've had some negative things happen, but like you set yourself up where there's more wins than there's going to be losses, and it's going to make handling those losses easier. And it's just a way that, I think if young people could do something of that, right? Like you don't have to be in your 40s and 50s when you realize like, oh, I wish I did a little bit more back then, because then I would be all set now. And it's like, I think to me, that's the whole point of like trying to spread the message of this. It's like you said, like, I don't care if it's real estate. Real estate's a great vehicle to get there. But if you just do, it's a little bit of sacrifice, it's a little bit of personal responsibility, it's a little bit of the, kind of long-term vision, essentially long-term goal. And then you can get there. And if you have time on your side, right? If you start when you're 12, 20, even 25, you've got a lot of years ahead of you, at which point then to enjoy kind of the fruits of that labor. If you don't think about it until you're 50, just the law of nature, you're not going to, you don't have as many hours to let it compound. So I actually think that's a very powerful message, and something for me with my kids, what I want to instill in them. I'm not doing real estate because I want to hand them like a bucket of money or anything like that. I want them to understand these values and put them in place early so that they can do whatever they want, right? If that's real estate, great. If that's, taking that generational wealth or that, investments and using it to feed hungry people, whatever, give back, that's the goal, right? It's not to be, ridiculously rich and sit in a room full of money. It's to, have some sort of purpose. And so when you start building toward that purpose at an early age, like you did, I think, just you can have so much more growth, and you don't have to feel rushed.
Yeah, there's a lot of different reasons I think that people move forward, and kind of being like open. I don't know if I like talk about this like on a, there's definitely parts of me that I get up because I'm worried about scarcity, or I'm sure everybody has a piece of ego that they want to prove it to themselves. And there's always these little pieces, and everybody's different. Like I'm not, I don't wear a watch, I don't have jewelry, or anything. Like that's not why I'm doing it. I do like nice cars. That would be nice to be able to kind of trade in and out of cars faster, but it's not the same for everybody. But whatever it is, it kind of builds up who you are. For me, I definitely want to prove it to myself. I'm harder on myself than anybody is. I'm definitely that scarcity thing. I want to be able to take care of myself and my family, and really anybody in my circle, and give back, and all of those things. Like you kind of just have to like tap into to keep getting up, because there are plenty of times when it is just hard. And I mean, we went through it last year with the coronavirus. I mean, we were really on an upward trajectory, and the world came to a stop. And, we had fortunately I had positioned us well enough that we could tide the storm, and, we had cash reserves and everything. But those are times you got to really dig deep, and, it's not as much fun going to work when you're shoveling out those reserves, but it's, I don't know.
It speaks to your preparedness, right? Yeah. The foundation that you built allowed you to get through, a crisis time like that. And it's like on a larger scale, just not even, from a real estate standpoint, it's like people that at least had some level of, reserves, or so. I'm talking like even in your personal life, some level of just not being completely stretched thin, then COVID was going to be less of a hit to them than it is to people that are, kind of really stretched out. And it's, and I recognize like there are different life situations as well. And it's not easy for a lot of people. But I think one of the quotes that I really like that I've seen is, it's difficult to be poor. It's difficult to be wealthy. Choose your difficult, right? So it's like, if you can, it just goes back to what you're saying with personal responsibility. It's like, let's try and take control of it ourselves. And maybe that means you reach out for help, you get a mentor, whatever it is. Like there are things that you can do to help set yourself up for success. But some of it is going to come down to just plain old work ethic and a little bit of sacrifice too, to get where you want, because then in 5 years or 10 years, then it really will be easy. Then you really will be, you keep those same patterns going, and you'll have built up that foundation that you need to really, kind of then set it on cruise control. I think is for a lot of people, that's kind of the goal when it comes to this, is get to a point where it's like, you don't necessarily have to build forever. You have to build to a point where you've achieved what you want, whether that, financial stability, time freedom, the ability to give back, all of those things. And then you just watch it happen, enjoy it, at that point.
Yeah. And, like when I talk to different investors, like I talk to different investors along the path at many different stages. Like some people are, their house is not in order, like their personal finances,
right,
they're not in order. And I'm like, I really love your investment right now, but that's got to happen first, before, in my opinion, before I take your money and invest it in properties. I think it's best to kind of get that ship on, kind of anchored, or build the house on a solid foundation rather. And then I talk to investors who have millions and millions of dollars of net worth, and they're looking for different angles and expanding the portfolio and looking at depreciation benefits and how can they shelter, taxes with the new 1031 regulations or opportunity zones. And I guess what I'm getting at is each person is a different stage in their journey, but the people I see that get the furthest, at least in my experience, are the people that just put one foot in front of the next, day after day after day. It could be just small incremental progress. And one of the largest investors I know came to this country with no money, couldn't even speak the language, learned our language, went to college, got a job, and just over decades of hard work has a very, very, very successful real estate company. And I'm just flattered he's interested in, kind of investing with the next generation. So it's just kind of a get started type of mindset.
Just do something, right? Like pick a thing. It doesn't matter what it is, right? There's a million different things to do within real estate. There are other ways to invest, but just start looking at it as if that's your goal, your sort of approach, in that you're going to do something to grow your wealth, starting however small it is. And you're right. The goal, you and I are very aligned on this. Like we don't want to take anyone's last few dollars. Like that's not
ethical. It's not really legal.
Right. Yeah. There
yeah.
are SEC regulations against that, but also it's just unethical, and it's not, so when you're talking to investors, it's very important to make sure that, people are aware you can lose some money. It doesn't happen commonly. I actually think it's kind of an interesting, this is a little bit of an aside, but like literally anyone can invest in the stock market, right? Like anybody can get a Robinhood app, and if they want to, they can put $100,000 on GameStop, right? They could have jumped in on that whole Reddit craze. Anyone could have done it.
Lost a fortune. Yep.
Right, and lost all of their money. Like any person can do that. There's no regulation to that. However, in order to invest in a lot of real estate deals, you have to be an accredited investor. And the rationale is that it's to protect people. But I'm like, well, why are we protecting them from what is probably the safer investment, and not protecting them from, like, I think it's actually like taking opportunities away from people. That's my opinion on it. I think I understand we don't want people to do crazy things and blow all their money, but like it's already happening. Like it can happen now just through the stock market. So it's I mean, this is a little bit off topic, but it's something that I've definitely realized as I go through it. And it's like you're doing capital raising, and you're thinking, there's all the rules for the a 503c raise versus a B raise, and who you can talk to, and you can't advertise with a B. But those same people that can't be a part of a 503c raise could take all of their money and put it on a stock that might crash tomorrow. Like,
yeah, that's like putting it all on black.
Right.
I think the same logic goes for a stock or for real estate. And and certainly we do some deals where we bring sophisticated investors in, and that really, I mean, it's a sophisticated investor for a reason, and that means they truly understand what they're getting into.
Mm-hmm.
And maybe that's where some people are at, and they're at the point where they just need to teach themselves. And it takes a lot of time to learn about real estate. If you're like really in the beginning, maybe just pick up the Rich Dad Poor Dad kind of overall type books. But to advance it a little bit further, I mean, there's courses out there. I think it's really important for people to kind of take a deeper dive and really fully understand what they're investing in, because I won't take their money unless they can truly understand how we're getting there. But that's also not to scare people away from, like, if you can't calculate an IRR and you don't know how to do a waterfall promote structure, and decide whether or not you're going to do a cash on cash or IRR hurdles and all that sort of stuff, that's just like French to you. That's okay, because I had no idea when I was buying my first house either. You can still get away with a more of a basic property.
You don't have to know every term, right?
Yeah,
if you're not doing the syndication, you don't have to know every single term.
Right.
I do think, since we're talking about it, would you just explain the difference between an accredited investor and a sophisticated investor for people that are listening? I think a lot of people will know, but some won't. I think that's an important distinction for people to understand why we're even talking about this, I guess.
Yeah, so an accredited investor has made $300,000 annually. I think $300,000, including their spouse, or $200,000 as an individual for the past few years, and they have a net worth greater than $1 million, excluding the value of their home. And that's the important part right there. So their investments, their retirement, their 401ks, their stocks, and whatever other assets they have, or just money in the bank, has to total over $1 million, excluding their home. And in the eyes of the SEC, that person is now deemed to be accredited, and they don't care if they lose all of their money, because they can now invest it at their will. But everybody,
they've shown that they're okay to lose their money, basically.
I guess so. But the guy that's worth $900,000, he's not allowed to do that. And this actually is validated by third-party validation services. We can't just take people's word for it. But then there's the other side of it, where you can take sophisticated investors, and that's people who you built a financial relationship with. I typically want to know their incomes. I want to know their goals. I want to, know that they've been able to kind of really understand what we're talking about as far as, how the, how the rents are going to be coming in, the expenses, the overall, the basics of the deal. They need to be sophisticated enough and learned enough about real estate to make a wise decision on whether or not they should make that investment. And that is allowed in certain deals, but only 35 of those investors can be involved in the deal, and we can't publicly advertise that deal. So they are definitely more far and few between, typically found more in that local real estate type deal. And I think, if you're looking to go into a property with your neighbor, that's kind of maybe where you're going to fall into that category. But definitely trying to get over that $1 million net worth is really key to opening Pandora's box, if you will.
Yeah. And it's either or. It's your $1 million of net worth, or
yes, I'm sorry,
make 200,000 single or 300,000.
Thank you for clarifying.
Married.
You don't have to have all of that.
Because I used to think that it had to be both.
It's either or. Yep.
Yeah. So you can either be, I guess, like a really good saver / investor and maybe not have as high of a salary, or you just make good money and then again, they don't care if you have if you've saved any of it. Basically, it's a fairly arbitrary definition, I think. And like I said, to me, I think I understand the reasons for it's supposed to protect people, but I also think it probably excludes some people from an opportunity. Because like you said, like if you have $900,000 in net worth, but you make $100,000 a year, you don't qualify. That's probably still a good investor like that.
Yeah.
So it's kind of an arbitrary number. They just expanded the rules in I think the fall, and it also includes like people that kind of work in the field. There's some other definitions, but that's the one that most syndicators use is this like accredited or sophisticated investor. And so just to also sort of touch on that difference in terms of raising capital, the 503C is only open to accredited investors and can be advertised.
That's correct.
503B is, like you said, 35. You can have 35 sophisticated investors. The rest would have to be accredited, but you can't advertise it. So you have to have a pre-existing and substantial relationship, essentially, is how they, I guess, define that. So it basically has to be someone you already know. You can't find a deal, then go meet them and say, hey, you want to invest in this deal. So,
and that's actually like, like as people get to know, especially like as our companies grow and, like as we've gone forward, certainly have more and more friends and family and, business colleagues will reach out, and we kind of just, I'm not expecting anything on that initial phone call, and sometimes it just takes them a couple months, but I've noticed more and more people are now calling back, and we're building that financial relationship with them. And we do deals that work for sophisticated investors every once in a while, just because I really want to make sure that my friends and family and people in my network are able to get the benefits of real estate, and not just get, let's say they decide to go with a REIT or something other than an actual syndication. The big difference with syndication is that you get depreciation benefits. You actually own the property, and that really increases returns rather than just you getting a portion of the overall REIT's distribution. It's I don't know. I think it's definitely, like you said, it's definitely a little unfair. But if you can find somebody who's putting together deals, building your financial I guess building that financial relationship, being open and honest about where you're at and where you want to go, can really open a lot of doors.
Yeah. And, there are lots of 503B raises out there. Like it's not like those are impossible to find. And so if people are interested, the idea is go form those relationships, right? If you want to invest in real estate as a passive investor, but you haven't reached that point of being an accredited investor first, that's an easy thing to do. It just might take a little bit more work where you have to, someone has to reach out to Nick here and say, look, I want to get to know you. I want to be a part of your deals, but I'm not accredited. Like, can I get, you may educate them a little bit, kind of tell them how the structure of deals work and things like that. And then you just get to know them. And like you said, you talk to them about what their goals are, right? Because there's going to be people that, they want their money in and out quick. There are going to be people that want a long-term hold. There are going to be people that have a certain threshold for returns that they won't invest in a deal that has projected returns below that, or so they're all different criteria, and the the tax benefits. Some people are doing it purely for the tax benefits. Usually those are the ultra wealthy people that are just like, I need to put my money somewhere so I don't pay a big tax bill. But it is really kind of figuring out what the investors' goals are, what they really want out of that investment. But I would say there's really no downside to investing in real estate in terms of the ability to grow your wealth. You just have to be smart about it, like you should be with anything else, right? It's just,
that's right.
It's doing your own homework. Back to sort of taking personal responsibility, like you brought up right at the beginning, is this is a good way to do it, but you can't just sort of blindly throw your money out there and think that everything will be okay.
Well, quick way to make sure that a sponsor is actually invested in the deal, and I guess the quickest way is, are they investing in the deal personally?
Yeah.
Do they have experience in that market or that type of product? And really just get to know who you're investing alongside. That can go a long way, and that is without a question the number one thing the big guys do first. Like if the big guys they haven't done a deal with you, they're going to start small with you. They're going to get to know you. They're not going to put all their eggs in their basket, in the one basket from the beginning. And then, when they find quality sponsors, the big guys really, really just open up. And I know it's a whole nother world. I look forward to getting there. Too much capital is a problem where you don't know how to place all the capital that wants to be in your deals. But that's just with building the track record and getting more and more and more people who are interested in working with the deals. And I can already see that trajectory coming. And it's a whole nother problem that we'll look to solve.
Yeah,
when we get there.
It's a different set of problems, but especially as people that are starting out with capital raising, you hear people having that problems of too much capital for their deals, and that's a very good problem to have. I think it's one of the you need deals and you need capital, and that's what makes the whole thing flow. So
don't feel sorry for yourself. I mean, that person who got there started in your exact shoes, right, and had to pick up the phone, just like you do. And
just start calling everyone and saying, hey, do you know anybody else who would be interested in this? So you just got to spend the time and put in the work. And it's, again, just back to that personal responsibility thing. So I think that's certainly a very good theme for this podcast episode. Nick, I just want to ask you kind of a couple of questions that I sort of like to ask for each guest. Sure. The first one has a lot to do with just the name of the podcast, the Know Your Why podcast. And it's always thrown out in, people talk when you're reading about becoming a real estate investor and all of that. Everybody sort of throws out, you need to know your why. I sometimes feel like it gets thrown out there and it's like, yep, I need to know my why. And then I kind of move on. But that's why I named this podcast the way I did, because I think it's incredibly important. It's been incredibly important for me. It took the birth of my son to really make me say, yeah, this needs to happen. And because once you have that why, your drive will continue through those bad times. Your drive will continue when we get hit with a global pandemic. You'll have still that kind of motivation. So for you, Nick, what do you consider your why at this point?
There's a couple really pure, honest, I think, human emotions. Certainly we touched on one of them. To be completely secure, to know that I don't have to worry about any type of financial burdens, proving it to myself that I can actually make it happen. I definitely I have goals to give back, and I also really would like to leave a major change on, on the cities and the developments that I'm doing, and certainly like one of the projects we're working on right now is going to become the tallest building in the downtown area, and it really is going to bring a lot of life back to that street. And obviously we would like to make a lot of money on the project, but there is a community factor to it, and it makes going to work fun. And I've sold insurance in the past. I actually did an internship in college, and I sold insurance for a while, and that was a good teaching moment, that you can make a lot of money, but for me, I was miserable. I hated it. I did not want to do it. And so for me, I guess to wrap it up, I want to be happy doing what I'm doing every day. Our time here is limited, and if too many days in a row I'm not enjoying what I'm doing, then I really need to kind of try to reevaluate and try to get back to that as best as possible.
Yeah, no, that's great. That makes total sense. And just a follow up to that, and because we can talk about it, because I know it's a 503c raise, but you talked about community, and the deal that Nick just mentioned. We don't have to get into all the details unless you want to, but it's in an opportunity zone, which for people who don't know, opportunity zones, there's, from a investor standpoint, it's really nice because there's some very substantial tax benefits to it. From a community and neighborhood standpoint, an opportunity zone is an opportunity zone because they're trying to drive development and growth and rebuilding into underserved and underprivileged communities. So it's a very good opportunity to actually give back and bring pride of neighborhood back, I believe. And
and get compensated for it.
Yeah, right. Yeah. You make some money doing good. So I think it's, there's a lot to be said for, kind of some of those societal benefits, other than just, it's nice to get paid, but it's also nice to like look around you and see what I created and made this nice community here. So I think there's a lot of that. So I think, that's great. Sort of everybody's why is individual, and I really like hearing kind of that's what got me into this whole podcast thing too, is I just like hearing why people, what drives people. So tell me something about yourself that maybe people don't know. It can be hobby, it can be a guilty pleasure, it can be anything that you can think of that you think would be kind of funny, interesting, out there, whatever that might be.
Well, I definitely like nice cars. I don't own any Lamborghinis or anything just yet. Well, I had somebody, this is going kind of back to the original question. I had somebody when I was like in 9th grade ask me what my dream car was. And at the time it was a Lamborghini Murcielago. And he looked right back at me, very serious, and was like, no, like a serious dream car, one that you might actually be able to buy. And I was so like internally offended. I was like, oh, I'm going to show you. Like, are you kidding me?
We pull him up in front of his house.
Yeah. Yeah. I don't know which finger might be waving to him when I'm doing it, but
you want to ride in my Lamborghini?
Yeah, that's right. No, and
froze
just getting the ego out of the way. I really just like the idea that this can give you the power to get, or kind of the freedom really to get what you want. Since growing up and kind of, I don't need to prove it to him anymore. I just want to reinvest. I'd much rather have the money reinvested in real estate. But one day when it doesn't matter so much, certainly do that. But I think that
in front of his house.
Yeah. I don't know if this is incriminating or not, but I definitely, I don't know if anybody likes Lamborghini Performantes. It's the Huracan. I can definitely say that the top speed that is posted online is lower than what I got a Porfamante to. So I definitely driven them quite quickly, and every once in a while I'll go rent a fancy car with some friends, and that was actually something I did during COVID just to get away from everybody.
Yeah.
So
Oh, that's
yeah,
awesome.
that's something.
That's awesome. Love it. All right. Well, we'll put everything in the show notes, but how would you like people to reach you? You have sort of a specific way that you like to be sought out?
Yeah, sure. Anybody can reach me through my email. It's nick@mentiscp.com. I'm quite responsive and look forward to talking to you guys. And if you want to partner on any deals, or if you want to take a look at our current offerings like the Ross Project in downtown Salisbury, be happy to talk about all possibilities. So
awesome. Final question, Nick. What advice would you like to leave for people in similar shoes to you on how to achieve the success that you're achieving?
I think we've touched on some of those points today, but I'll take it back to, I was sitting in a meeting with a mentor pretty early on. I think he at the time had about 400 homes, and I was sitting in his office, and he looked at me and he said, I don't think this is really your issue, but you can't be afraid to pull the trigger. And I was like, well, I don't think that's me, but it stuck with me all these years. Every time I've hesitated, I really want to get that gut check. Obviously, we want to make sure we're not just doing any deal that comes across our our plate, but it's okay to stretch and get uncomfortable. And if you're making the best decision you can with all of the information that's available to you at that time, what's the worst that can happen? You're at least going to learn from it. And, if it doesn't work out, you'll pick up the pieces on the other side. You'll dust yourself off and do it again, but pull the trigger, get something started, call a real estate agent. When I was in college buying my first house, I didn't even have a car at school with me. So I was biking to the real estate agent's office and parking my bike around back and walking to the front and pretending like I had enough money to buy a house, which I guess I did, but not a big one, that's for sure. So
right.
Yeah.
Right. Fake it till you make it. Make the agent believe that you've got this. It's going to be fine. Don't worry.
Oh, I've had some weird. I'm biking to a real estate agent's office in a suit. You get some side glances like, what the hell is that? I didn't care. I was gonna make it happen. Period. One way or another.
Happen. Yeah.
Yep.
Awesome. I love it. Well, thanks a lot, Nick. I really appreciate your time and coming on. I think you provide a lot of value and inspiration to people. I think it'll be great when this one will come out and everybody can kind of hear your story and really what you've done by just taking personal responsibility at a very young age.
Well, thank you, Jason. It's nice talking with you.
Yeah, you too.